Good morning to one and all present here. I am Dr. D. Padma, Associate Professor of BCom Professional Accounting, NGM College, Pollachi. Now, we are going to discuss about the working capital. In a company, they need two types of capital. One is fixed capital and the another one is working capital. Working capital is nothing but the expenses and income that can be converted into 12 months. For example, if you are selling the goods on credit, you have to sell the goods on credit to the debtors for 3 months credit or 6 months credit. And if you are buying the goods from the creditors, you have to pay it within a period of 1 month or 2 months. So we are going to deal with the day-to-day expenses, or to meet the day-to-day expenses, the requirement is called as working capital. What is the definition for working capital? The gross working capital may be defined as the total assets of the company. On the other side, the net working capital of the company is nothing but the current assets over current liabilities. There are two concepts. One is gross working capital and the another one is net working capital. Gross working capital is nothing but the total current assets of the company, and net working capital is the current assets minus current liabilities. And we have to look into the working capital management cycle, how the working capital revolves. First, a company needs cash. With the use of the cash, they will buy the raw materials, and with that raw materials, they will convert the raw materials into finished goods. It will take some time. Some of the industry requires 3 months or 4 months or 1 week or 15 days. Depending upon the nature of the business, they will convert the raw materials into finished goods. And that finished goods will be stored in a warehouse and that can be sold to the debtors. And the company can give 3 months or 6 months period for converting it into cash. So after getting the cash, they will go for purchases and this cycle revolves. This is called as working capital management cycle. What are the components of working capital? The components of working capital is nothing but current assets and current liabilities. First, we have to describe what is the meaning for current assets. Current assets are generally realized within a short period of time, generally within a period of 1 year, that is 12 months. The current assets includes the inventories or stocks, that is raw materials, work in progress, finished goods, consumables. And apart from the stock, we have sundry debtors, bills receivable, prepayments, that is we may pay the amount in advance. For example, insurance can be prepaid. For example, rent can be prepaid. And short-term investments we can make, and accrued incomes and cash and bank balances we have. All these will be the components of the current assets. The second component is current liabilities. Current liabilities are those liabilities which are generally to be paid within a period of 12 months. That is within a period of 1 year. What are the components of current liabilities? Sundry creditors. We may buy goods on credit. For that we have to pay for sundry creditors, bills payable, accrued expenses, that is outstanding expenses we have to pay. For example, there may be outstanding expenses on wages, outstanding expenses on salaries, etc. And bank overdraft. Sometimes for the short term period, the companies may approach the bank for overdraft, and bank loans, proposed dividends, short-term loans and tax payments due. The tax payments may be income tax and GST. So these are the two components of working capital. And how do we classify the working capital and what are the types of working capital? The working capital can be divided into on the basis of concept and on the basis of time. On the basis of concept, we can divide the working capital into two, gross working capital and net working capital. And on the basis of time, we can divide the working capital into permanent working capital or temporary working capital. Under permanent working capital, we have the another classification, regular working capital, reserve working capital. Under temporary working capital, we have the seasonal working capital and special working capital. Next. As we have already discussed, the gross working capital is nothing but the total current assets of the firm. We should not take into account the current liabilities, only the total current assets, that is debtors, cash balance, prepaid expenses, bills receivable, etc. And net working capital is nothing but total current assets minus current liabilities. This is called as net working capital. And next one is permanent working capital. In some of the companies, they need the working capital on a permanent basis. That can be otherwise called as fixed working capital. That is, in some of the companies, they must have like 4 lakh or 5 lakh or 1 crore rupees as permanent working capital. And the next classification is temporary working capital, which can be otherwise called as variable working capital, fluctuating working capital, or cyclical working capital. So we have gross working capital, net working capital, permanent working capital, and temporary working capital. And apart from this, that can also be classified into regular working capital. For example, a company requires working capital for the payment of regular salary, regular wages, regular expenses like electricity bill, Wi-Fi bill payment, stationery. Like that, the company requires a regular working capital. That can be classified as regular working capital. And a reserve or margin working capital, which is needed for safety cushion of the company. For example, like corona, some of the natural disasters may happen. In such a situation, in case of strikes, in case of layout, the company may require the working capital. That may not happen regularly, that may not happen frequently, but even that the company requires that working capital. That capital is called as reserve or margin working capital. And the next one is seasonal working capital. Some of the companies may be seasonal oriented companies. For example, sugarcane, that is a sugar manufacturing company. They need to buy the sugarcane in seasons. So in such a situation, they need seasonal working capital. The demand for the working capital may be only seasonal. They may purchase the raw material only if it is available during the seasonal periods. And the next one is called a special working capital. This may also be needed only in case of special occasions. For example, the company wanted to meet the accidents or marketing or advertising initiatives, or the company may introduce new product, or they wanted to develop the new product. For that, they have to incur the research and development expenses. So in such a case, they need the special working capital. So we can go into the regular working capital, reserve working capital, special working capital, and seasonal working capital. And what are the sources of working capital? Where we can get the working capital? We can borrow capital. For example, we can get debentures. We can issue the debentures. We can go with the commercial banks or financial institutions, or we can issue the preference shares. In some of the cases, we can mobilize the working capital. And we can go for private equity or equity shares, or even we can issue the preference shares, convertible debentures. This is one of the sources of working capital. Another source is term loans. That is, we can go for externally by borrowing the working capital, such as equity shares, preference shares, convertible debentures, venture funding, etc. And we can go with the internal mobilization of working capital, such as we can get it from the profit and loss account, reduction of working capital by selling the fixed assets which is obsolete, or some of the assets which may not be needed in the future years to come. By selling that assets, we can mobilize the funds. These are the sources of working capital. And we are dealing with the working capital management. Why we have to study the working capital? Why the working capital is given much importance by the companies? Because every company is running with the working capital management. They are saying that I need that money, I need this money, I need this much of money for the month of January, for the month of March, for the month of October, during Diwali season. Why they are running behind the working capital management? What is the importance of working capital management? First one is solvency of the business. If the working capital management of the company, if the working capital of the company is good, it shows that the company is in a solvent position. That is, they are able to pay their debts within a period of 12 months, and even then they can get the cash discount from their creditors. So the solvency position of the business can be measured with the working capital. And the second one is goodwill. If the company is having the sufficient working capital, then the goodwill of the company will automatically rise. And you can get the easy loans from the banks. For example, some of the companies may need loans for loans during festivals like Ramzan, Christmas, and Pongal or Diwali. So in such a situation, they can approach the bank and they can get the easy loans. And as I said, we can get the cash discount from the creditors if you are paying the money regularly. And regular supply of raw materials is ensured by our creditors if you are prompt in making our payments. And The morale of the employees is based on the regular payment of salaries and wages. If you are paying promptly the salaries and wages, the morale of the employees will automatically boost, which in turn they will be producing the quality goods. So for the payment of regular wages, salaries and day-to-day commitments, we need to go with the working capital requirement. And exploitation of favorable market condition. As I have said that the raw materials may be available only during some seasons. So in such a season, the raw materials may be available in a easy manner with a small cost, or the cost involved is very less, or the prices may be low in such a seasons. So in order to exploit the seasonal demand, in order to exploit the seasonal product availability, we must have the working capital in our hands sufficiently. And next one is ability to face a crisis. As I have already told that we may face some of the crises like accidents, natural disasters, or lockout or strike by the employees. In such a situation, if you are having efficient money, if you are having enough money, working capital, you can face a crisis. And quick and regular return on investments. Every investor wanted to have the quick return on their investment. As I have already told that we may get from the equity shareholders, we may get money from the preference shareholders, debenture holders, they need quick return from their investments. If you are having the working capital, then we can mobilize the funds easily. And high morale. As I have already told that if the salaries are paid regularly to the employees, their morale will be boosted. And next we are going to discuss about what are the factors influencing the working capital requirement. As we have already discussed that some of the companies may need lakhs of rupees for working capital. Some of the companies may need thousands of rupees. Some of the companies may require crores of rupees for working capital. And what are the factors that will determine the working capital requirement? It may differ from company to company. It may differ from industry to industry. What are the factors? The first factor is nature or characteristics of the business, character of the business. For example, if you are running the public utility undertakings like transportation, you need only small amount of working capital because daily you can get the collection. But trading and financial firms, they require relatively large working capital. Manufacturing company, they need money as between the trading and public utility undertaking. So the nature of the business will determine the working capital requirement of the company. And the second one is size of the business or scale of the operation. Some of the company may go with the medium scale or small scale or large scale operation. Obviously, it is decided that large scale industry require large or huge capital. And the third one is production policy. What is the production policy of the company? Some of the companies may manufacture the products for a regular period and some of the companies may manufacture the product only seasonal period. They will stop the production for 3 months or 4 months because of non-availability of raw materials. So the production policy of the company may decide the working capital requirement. And manufacturing process or length of production cycle. How long the company is going to take the conversion of raw materials into finished goods. If it is a longer period, the working capital requirement is also very long. And the next one is seasonal variation. Like that, we have discussed in the importance, we can exploit the situation, we can exploit the market when the goods are available in the market in bulk, and during the season, we can get it and we can ensure the uninterrupted flow of the production. And rate of stock turnover, how far the stocks are converted into sales, that will be one of the factors determining the working capital requirement. And credit policy of the company, how much is the month or weeks given to the debtors for paying the money, and how much is the credit period given by the creditors for paying us to pay. It is given by the companies for paying us to pay our debt. So the credit policy of the company will decide the working capital. And next one is business cycle. As we know that there is a business cycle called boom, depression, and a declining stage and a recovery stage. So based on the business cycle, we need more money based on the business cycle. And the rate of growth of the business. The working capital of the company can increase with the growth of its expansion of its business. For example, as we have said that special working capital is required if the company is going to launch a new product, if the company is going to give more importance for advertisement and marketing, etc. And price level changes. The price level changes. For example, the raw material prices may change, the labor cost may change, the overheads may change. So based on the change in the price levels, the working capital requirement may change. And how to prepare the working capital requirement statement. First, we have to take the current assets. In the current assets, we have to take the average stock, that is the stock of raw materials. And the second one, we have to take into account the work in progress. The work in progress is nothing but the product is not yet completed into finished goods. That includes raw materials, labor and overheads. And next we may have the finished goods in our hand, that should also be added. And next we may add the trade debtors, and next cash and bank balance. All these are the components of current assets. This will be totaled as current assets. Next we have to go with the current liabilities. What are the current liabilities we have to meet? Trade liabilities, that is trade creditors, outstanding wages, outstanding overheads. So if we total all these things, that will be called as total current liabilities. So for the purpose of getting the working capital, we have to deduct current assets minus current liabilities. And sometimes the companies may need some 10% or 20% as a provision. So we have to add provision for contingencies, and totally we can get the net working capital requirements of the company. Thank you.